Good evening, everyone. Friends, please confirm that my audio is clear to all of you. Audio as well as the video is clear. Please confirm. Good evening, Aditya. All clear, right? All right. So, friends, today we are going to learn about another scoring chapter at the SCMPE of the CA final level, friends, which is strategic analysis. Hold on, I'm using some wrong pen. Strategic analysis of operating income. Okay, so friends, as I have always said, I have already told all of you, I am here doing an SCMP success series where every week I'll give you the conceptual overview of each chapter. I will tell you which questions are important so that from exam point of view you can study and you can score the best marks in SCMPE. All right, so now today I'm going to talk about this chapter of strategic analysis. Friends, even before we move forward, please subscribe to my Telegram channel so that whenever I'm going live I will be announcing over there. I think the channel goes like this: t.me/Tarun_Jagdish. Let me confirm, friends. I believe that is my Telegram channel name. t.me Tarun_Jagdish. Yes, this is right, friends. So just subscribe here. If you once you subscribe here, whenever I'm going live on YouTube, you will be given the direct intimation about the same thing. Or you can also click the bell icon in YouTube. So whenever I'm going live, you will get a notification that I am live right now. All right. So friends, shall we positively start with our session today? All right. So friends, let's start off with today's session. First, I'll give you an overview of things that you need to learn. In the overview, the first thing that comes over here is activity-based costing. That is the base of this chapter. Based on this, they are teaching you two other things. One is DPP and the other one is CPA. All right. These are the two things that they teach over here. Then the next thing that you have to learn in this chapter is called as activity-based management, under which you are doing an analysis of non-value added activity and you're using certain terminology for the same. And the last important thing that you learn in this chapter is MCE, or that is nothing but manufacturing cycle efficiency. Friends, this chapter is a problem oriented chapter, and from the analysis of the previous question paper, what we have understood is that exam wise, rank number 1 lean system will be the chapter which comes for the exam. Rank number 2 was strategic analysis. All right, I'll give you a one quick minute. Can you put this overview in your books now? All right, I'll go to the next part now. We'll start with the activity-based costing. I don't know, but I believe you have already learned this at your inter level. Have you learned it, friends? When I take my inter classes, I believe this one of the topic that I cover is this one. Now, friends, I'll give you a very, very simple example. particulars. Let us say we are talking about two particular food items. One is a pizza and the other one is a burger. All right. Let us assume the selling price of pizza is turning out to be 1000 rupees and that of burger is turning out to be, let us say, 500 rupees, or let's make it 200 rupees. The variable cost, that is the material cost, is there. You have labor cost, variable overhead. All this turns out to be 600 over here and it turns out to be 100 over here. The third thing that we apportion over here is what? Is the fixed cost. So friends, when they apportion the fixed cost, it is basically a total cost. Let us assume we are selling 1000 units of pizza and we are selling 1000 units of burger. Alright, so total how many units are we selling? 2000 units. Let us assume, I'll put it over here, the total fixed cost is turning out to be 50,000 rupees. Now everyone tell me what is the total number of units that we have over here? 2000. So what is the fixed cost absorbed per unit? That will turn out to be 50,000 divided by 2000. Do you get the answer as 25 rupees per unit? Correct? So here I'll put 25 and here also they will put 25. If you do like this, tell me friends, what is the profit you get for the first product? 1000 minus 600 minus 25. Do you get the answer as 375? Okay. And the other one you get 200 minus 100 minus 25. You get the profit as 75. Friends, in this method is what we call it as traditional method, because in this we are absorbing overhead based on units. All right. Okay, this is the basic example which I will be elaborating now, friends. Can you write down till here in your books? I'll give you a minute. All right, I'm not giving you much time, friends. The recordings will anyways be available for all of you. All right, so here there are two methods of costing. The first one is called as traditional method and the second one is called as the ABC method. Under traditional method, overheads are absorbed either based on units, or it is done based on hours, or it is done based on maybe it's done based on labor hours, or it is done based on machine hours. This is what you learn at the CA inter level. Under this, overheads are absorbed based on what, my dear friends? It is absorbed based on activities. So that is the highlighted word. Can you write down this in your books? All right. So now, even before I proceed to ABC, I would like to provide you with the structure of a factory. In a company, when you go to the factory, ideally inside the factory, you have 4 departments. Department number 1 is what you call it as store. Department number 2 is what you call it as setup. Department number 3 is what you call it as inspection department. And department number 4 is called as the dispatch department. Everyone repeat with me, friends. What are the 4 departments that we are having over here? Store, then you have setup, then you have inspection, and finally you have what? Dispatch. So when you talk about store, what do we do over here? Raw materials get stored over here. You will have a store manager. Okay. Let us assume we are paying him 10,000 rupees per month. Same way, setup is a place where you convert pizzas, raw material into pizza, and raw material into burger. So we'll call this fellow as a production manager. Under the inspection department, what will be the role of the inspection department? Every time they make one pizza, take a bite of the pizza and tell to the person whether the pizza is of good quality or it is of bad quality. So his name is, let us say, call it as inspection manager. Last one is dispatch. What is the role of dispatch? Take the pizza, deliver it to the customer. So this manager will be called as what? He will be called as the dispatch manager. Let us assume everybody's salary as of now is how much? 10,000 each. Okay, so 10, 10, 10, 10. If you add up these four, you get the total as how much? 40,000. Apart from that, this building you will have to pay a rent. Let us assume you are paying a rent of also 10,000. So 10, 10, 10, 10, 10. Total, how much is the fixed overhead? 50,000. Is that exactly the same amount that we took it over here also? Okay, can you draw this picture in your books? I'll give you a minute. Keep drawing along with me, okay? So that we save time. All right, friends, I believe you're all done writing this. Okay, so now what happens is under activity based costing, the overheads are apportioned based on activities rather than doing it based on number of units or labor hours or machine hours. So I will put a table over here, particulars. Then we will have something called as cost pool. You have cost driver, and then we have something called as the ABC rate. Even before this, I will show you the analysis of cost driver. Okay, so what happens in the cost driver is particulars. We will put the corresponding activity happening for pizza, activity happening for burger. So now everyone interact with me. Who is the first fellow? Store. What is the main thing that the store manager will do? He has to keep the raw material for pizza. He has to keep the raw material for burger. Am I right? So basically, whenever the stock reaches the reorder level, he will place a fresh order. So his main work over here is number of store request. If he is placing more requests for pizza than for burger, then automatically what will happen? His salary more should go to pizza, less should go to burger. So let's assume the number of requests is 600 for pizza, 400 for burger. What is the total that you get over here? 10,000 store, not 10,000, how much is it? 1,000 store request. After store, what is the next thing that you have? Setup or the production manager. What is the main thing that he does over there is called as setup. He sets up the machine for pizza. He sets up the machine for burger. Assume this fellow has spent 500 setups for pizza, another 500 setup for burger. Total setups will be how much? 1,000 will become the total setup. Friends, I believe you are all clear so far. Okay. After this, the third fellow is called as inspection. His main work is what? Number of inspection. Let us assume he has done 6,000 inspection for pizza, 14,000 inspection for burger. Total, how much is the inspection now? 20,000 inspection. Everybody clear? What is the last fellow? Dispatch. Dispatch is based on what activity, friends? Number of dispatch. Let us assume he has dispatched pizza 10 times, burger 40 times. Total dispatch is how much? 50 dispatch. Last one is rent. How do you apportion rent? Based on the area used in square feet. So let us assume 400 square feet is used for pizza, 600 square feet is used for burger. Total how many square feet is there? 1,000 square feet. Can you write down till here in your books now? I hope you are all following what is happening here, friends. All right. So once you are done writing about the cost driver, okay, now I will come over here and I'll put the four cost. Store cost, setup cost, inspection cost, dispatch cost, rent cost. How much is the cost for store manager? 10,000, 10,000, 10,000, 10,000 and 10,000. What is the cost driver for store? 1,000 store request. What about for setup? 1,000 setups. What about for inspection? You have 20,000 inspection. Okay, what about for dispatch? You have 50 dispatch. And for the last one, you are having around 1,000 square feet. So now, friends, if I apportion this, I will get over here 10 rupees per store request, 10 rupees per setup, 0.5 rupees per inspection. Next one, 50 dispatch means I think it will be 200 rupees per dispatch, 10 rupees per square feet. These are the activity based rate. So friends, I got the cost pool, I got the cost driver, I got the ABC rate. So I'll call this as step 1 cost pool, step 2 cost driver, step 3 is what we call it as the ABC rate. Is everybody clear with this part now, friends? Alright, I believe you're all clear doing this part. Can I go to the next one now? Okay. Once you get this ABC rate, then we go to the next step, which is called as apportionment. Alright. So when you're talking about apportionment, here I'll draw a table, particulars. You have pizza, then you have burger. So we have store, setup, we have inspection, we have dispatch, and we have rent. All right. So everyone now interact with me. So what happens over here? We have got the answer as 10 rupee per store request, 600 and 400. So here the formula would be 600 into 10, that is 6,000. 400 into 10 would be how much? 4,000. So that is how we now apportion the cost between these two. What about in case of setup? Again 10, but it is 500, 500. So how much will come over here? 5,000 for pizza, 5,000 for burger. Inspection is 0.5. You have 6,000 and 14,000. 6,000 into 0.5 is how much? 3,000. 14,000 into 0.5 is 7,000. Dispatch 200 per dispatch, 10 and 40. So 2,000 here, 8,000 over here. And what about the last one, 10 rupee per square feet, 4,000 and 6,000. So if you add up all these things, let's check. What is the total that you get over here? 5, 8, 10, you get the total as 14,000. 12, 8, 20,000, 20,000 plus 6 will be 26,000. Alright. Now what I will do, I will take the number of units. So tell me what is the number of units that we had over here. Let me go and check that. I think we had 1,000 units each. 1,000 units for pizza, 1,000 units for burger. So friends, the cost per unit turns out to be 140 rupees per unit for the first one and 260 rupees per unit for the second one. Friends, the answer has suddenly changed. I'll give you some time, write down this or understand this thoroughly, after which I will show you the comparison. Fine, friends. I believe you are clear with this part. Can I go to the next one now? Alright, so once you have done the apportionment, then I will draw a profitability statement. I'll draw a table over here, particulars. Then you have pizza and you have burger. So we had selling price, variable cost and fixed cost. How much was the selling price? 1200, 600, 100. And what about the fixed cost that we found out? 140. And the other one turns out to be 260. So friends, the profit will change now. Earlier, how much did we get? Earlier case, we got the profit as 375 and 75, right? Let us check how much we get now. So 600 is 400, 400 minus 140. Do I get the answer as 260 over here? Wait, how much did I get earlier? We got 375, is it? 50,000 divided by 2,000 units we did. That is 25 rupees per unit is what we got as a fixed cost. But wait, now we have got it very much high. Have we done it correctly? 36,000. Wait, friends. I think there's a small mistake in the thing that I did earlier. Hold on. 50,000 is the total fixed cost and the total units was 2,000. So we got the answer as 25 rupees per unit. Okay, but now what have we done? Okay, I made a small mistake. It's 14 rupees over here and 26 rupees over here. One more mistake I think what I have made is 6 plus 5, 11 plus 3, 14. 14,000 plus 2016 plus 4, 20,000 friends. I have made a small mistake in the calculation. Okay, let's remove this part and correct these numbers. Alright, so let me just go and do it now. So here it will be 20,000. And here we will get 4 plus 5 is 9, 9 plus 7 is 16, 16 plus 8 is 24 and this thing is 30,000. Now it's making sense. And the units are 1000 units and 1000 units. So you get the answer as 20 rupees per unit and you get the answer as 30 rupees per unit. So here this will be 20, this will be 30. So now what will happen? 400 minus 20 will give you 380 as the profit over here. Here you will get the profit as 70 rupees. Whereas earlier, what was the answer we got? Earlier we got 375 and 75. But in reality, it is supposed to be 380 and 70. So I'll just write down below with a reading pen. Profit under traditional method. We got the number as 375 and 75. So the impact is under traditional method, the profit is 5 rupees less than actual. And for burger, the profit is 5 rupees more than actual. So what will happen? We will be misled that I can sell burger and I am making profits over there. Alright. So that is how the answers change. Which is a better method, friends? Activity based costing is the best method because here you are apportioning the cost based on activities. Can you write down this in your books? I'll give you a minute's time. Thank you, Aditya, for correcting me. I believe you're all done writing this, friends. I'm going to the next part now. So this is about activity-based costing. Everybody clear with this part? Okay. So under activity-based costing, what are we exactly doing? We are categorizing and we're doing 4 steps. Step number 1 is called as cost pool. Step number 2 is called as cost driver. Step number 3 is called as ABC rate. And step number 4 is called as apportionment. All right. So first you find out the cost pool, then cost driver, then ABC rate, and then apportionment. Friends, keeping this theory as the base, they are teaching you 2 more things over there. One is called as DPP, or the full form of DPP is direct product profitability. Whereas CPA, the full form is customer profitability analysis. Everybody clear with this part? So these 2 are nothing but activity based costing only, same 4 steps. But for terminology purpose, they are using DPP and then they are using CPA. Keeping this in mind now, I will now explain to you the logic of DPP. Full form is direct product profitability. So when you do a direct product profitability, we first take the sales minus we take the cost of goods sold minus there are some direct costs which are involved, such as warehousing cost is there, storage cost is there, etc. So once you reduce this, point number D, you will be able to find the profit. Okay. Now friends, this warehousing cost and storage cost are found out using the techniques of what, friends? Using the techniques of activity based costing. I'll give you a minute. Just write down this in your books. I believe you're done with DPP. The next important concept that comes over here is CPA, Customer Profitability Analysis. Friends, here also what they will do is, they will take the customer. Suppose my customer is there A, B, C, D, etc. To all these customers, I will put the cost pool, I will put the cost driver, then I will put the ABC rate, and based on the ABC rate, what am I going to do? I will do apportionment. Are you all clear with this part? That is what we do in CPA, or Customer Profitability Analysis. Everybody clear with this part? Okay. Calculation wise, exactly the same, nothing new, hence I'm not going in depth of this, friends. Alright. After this, we have a next thing to learn over here, which is called as activity based management. Okay. Or the short form is ABM. Friends, under this, what they do is, they will take a company, they will study the whole process, and they will convert these process into 2 parts. One is called as value added activity, and the other one is called as non-value added activity. When we speak about value added activity, what they normally do over here is they retain all the value added activity and they eliminate all the non-value added activity. What do you mean by non-value added activity? There are certain activities which does not give you any form of result. Such activities are called as what? Non-value added activity. As per this example, they say the following activities should be eliminated, such as storage or storing, unnecessary movement, unnecessary waiting, unnecessary inspection, and scheduling. So according to this textbook, all these things are non-value added. So let me go back to my diagram that I have drawn for you. All right. In this diagram, the store is non-value added. Inspection is non-value added. Setup, if you're doing some scheduling for setup, that scheduling again will turn out to be what? Non-value added. Are you all clear with this part now? Okay, so I'll come back over here now. Okay, so that is what Tata also did. I think I taught you in the previous class about Tata Steel case. What Tata did was, there was a supplier over here. Supplier will normally deliver goods in the store. From store, it goes to production. From production, it goes to inspection. And from inspection, it goes to dispatch. This is a normal process. What Tata Steel did was, it removed the store and used the supplier go down as store. It eliminated inspection, but he ensured that they are giving him only good quality products. Are you clear with this part, friends? By doing so, he retained production, that is value added activity, and dispatch, which is also value added activity. I'll give you a minute. Please go through this, friends. I believe you are clear with this part also, friends. Can I go to the next one now? All right. So that is about what? This is about activity-based management. Now, friends, based on this, there is a table in your study material which you must study. It's coming in the exam. I'll show you which table it is. We are doing strategic analysis today. One diagram is there which is coming frequently in exam. Very, very important diagram. Yes, this diagram, friends. I want you to draw this diagram in your books because they are asking you question based on this. Look, customer places an order and the order is received by the manufacturing department. You can imagine Swiggy or Potafo for this purpose, or Zomato for this purpose. So when you look at Zomato or Swiggy, customer places an order at 8 o'clock, order received at 8:05. So there is how much time gap over there? 5 minutes. That 5 minutes is what they call it as receipt time. Order received by the manufacturer, machine setup begins for order. So for that time is what they call it as waiting time. After that, the order manufactured product is becoming finished goods. That time is called as manufacturing time. So you are having two times now: waiting time, manufacturing time. These two together is what we call it as manufacturing cycle time. Okay. And after this is done, it is delivered to the customer. That is called as delivery time. This entire time taken is what they call it as customer response time. So friends, in exam, they can ask you a question, how much is the waiting time? Then you have to tell the formula from here to here. How much is the manufacturing time from here to here? So friends, please draw this diagram in your books. This diagram is very, very important for all of you. I believe you're all done with this part. Can I go to the next one now? All right. So once you're done with this, I'll just come down and show you. Look at this. Receipt time, manufacturing time. Manufacturing cycle time is coming in the exam many a times. Then they use the word called as cycle time. Just check if they have a cycle time terminology over here. Manufacturing cycle time is there. Cycle time is the length of time from ordering to selling an item in a retail environment is called as what? Cycle time. So non-value added activities in retail include shipping time from supplier, delay in receiving department, etc. etc. So this is something different, friends. It is not a part of this one particular diagram that is drawn over here. So you can note this cycle time separately. All right. Now, delivery time we already learned. Customer response time also we have definitely learned. Now, friends, there is an efficiency formula called as MCE. The full form of MCE is manufacturing cycle efficiency. So this can be denoted using the formula processing time divided by manufacturing cycle time, or in other words, value added activity divided by value added plus non-value added activity. So for example, if the processing time is 10 hours, manufacturing cycle time is, let us say, 12 hours. So tell me how much is 10 divided by 12? Do I get the answer as 83%? So what this means is that 83% of the total activity time is value added activity. All right, friends, I'll give you 1 minute. Please go through these things. Yes, friends. So we are done with this part also. All right. Conceptually, this chapter is over with this. So let me go back to the initial overview that I gave you. Okay. We have learnt about activity-based costing. We learned about DPP. We learned about CPA, ABM, analysis of non-value added activity. Here we learned many activity terms like manufacturing cycle time, response time, etc. All that is what I call it as terminology. And finally, what do you have? You have manufacturing cycle efficiency. So I have covered all these points, friends. Do you have any doubt? Please let me know. Else I'll go to the textbook and tell you the important questions to work out. Let's start from the beginning and let me tell you the important questions now. Friends, question number 1 is actually a standard costing question that it's better to discuss after I cover standard costing for all of you. Otherwise, you may find it very, very difficult. All right. So I'm keeping this one part pending. Let's come down. DPP illustration number 2 is also not very relevant. It's a very, very detailed question. Such elaborate questions are not coming in your exam so far. It's a very good question, but a very lengthy question. If you look at the size, it is taking quite a lot of time to cover this question. So you can keep that also pending. 3 is good. You can do illustration number 3. So please mark it as a good and an important question. It is a question on customer profitability analysis 3. ABM we just learned now. As I told earlier, these are all the non-value added activity. Storage, movement, waiting, inspection and scheduling. Alright. This diagram very, very important, friends. Mark this diagram as important for the exam. MCE we just learned now. We'll do a problem. Yes, illustration number 4. It's a very easy problem. We can discuss and do this over here. Processing time. Everyone tell me. Value added or non-value added? Value added. Inspection time, non-value added. Waiting time, non-value added. Move time is also non-value added. So what's the average non-value added time? Add up 1.5 plus 6 plus 7.5. Do you get the answer as 15 hours? Value added time is how much? 9 hours. So manufacturing cycle efficiency would be 9 divided by 15 or 9 divided by 24, I think. Yes, 9 divided by 24, that is a total 15 plus 9. You get the answer as how much? 37.5. And the manufacturing cycle time, they had total 24 hours. They produced 60 units. So the cycle time turns out to be how much? 0.4 hours per unit. Can you read through this now, friends? All right, friends. Now I'll tell you what's the next important question to do. Let's come down. 15.5 is not important. Yes, friends, this question, manufacturing cycle efficiency, very, very good question and important question. Mark it as important. All right. 2 is a very easy problem. One time doable. Do it one time. This is a very good question, friends. Question number 3, must to do. DOF and star. This is the best question on DPP. Okay. 4, one time you do it. One day before the exam, not required. 5 also same thing. One time doable. See, they have given the cost pool, cost driver. You only have to do apportionment. 6 also do it one time. Not on the day of the exam, you can do it earlier. 7 is also almost the same. Alright. 8 is a case study. Please do this. Very, very important. This is a very nice case study, friends, in which they are talking about 2 types of pianos. Electronic piano that general people use, specialized pianos used by people like A.R. Rahman, etc. A very good case study. Please do this. Okay. That's it. So with that, this chapter gets over. So friends, in such a limited time, you can actually cover a huge chunk of this chapter. All right, friends. So I'll pack up my session now. But before I pack up, I would like to ask you to register here so I can give you some important content. I'll just show you that content right now. You have to install my app Tarun Jagdish from Play Store or click on class.tarunjagdish.com. All right. Here I have an SCMPE refresher course. If you come here and go to live classes, I'll show you. Here I have done the concept revision of many parts, what I'm doing over here. So you can always get double concept revision by attending this session. For example, if I click here,
tell me any, I again open 2007.
Strategic analysis.
It's working anyways.
I'm muting it so that here you have taken the example of dosa and semia. For you, I took the example of pizza and burger. Cost pool, cost driver, ABC rate. All right. Then I'm giving all the screen shared calculations of how dosa and semia are done. Conceptually, it might be the same, no much difference. Then, this is some other concepts like decision making chapter that I am covering over here. So wherever you need extra conceptual grip, you can always go to my SCMPE refresher course and do it. On a daily basis, morning around 8 o'clock, I am adding everyone to the batch. So just register here and wait for 24 hours. I will make sure that you are getting added to the batch. So shall we pack up our session with this now, friends? All right. So we are done with today's session. Next week, we will do the next important chapter, which is modern business environment and cost management techniques. Any one of these I will do in the next class. So thank you so much, friends. Thank you for your patient listening. I will see you next week. Have a nice time ahead.